Apple did not just beat earnings expectations, it ran straight through them. In its first quarter of fiscal 2026, Apple reported total revenue of $143.8 billion, up from $124.3 billion the same quarter a year ago. iPhone revenue alone came in at $85.3 billion against analyst expectations of $78.2 billion. That is, a $7 billion beat on a single product line. The iPhone 17 is not just selling well, it is triggering what analysts at Wedbush Securities are calling a once-in-a-decade upgrade window. And the financial implications for Apple, its supply chain, and the broader tech sector are still playing out. Stay with this until the end because the next catalyst on Apple's calendar is the one that could either extend this rally or expose the valuation gap that a growing number of analysts are quietly flagging. Before the numbers are broken down, one question deserves an honest answer. Was this quarter actually a surprise, or did Wall Street simply model it wrong? The iPhone 17 launched in September 2025. Pre-orders came in 5% above the iPhone 16 cycle. Global lead times surged 80%, a signal that demand was outpacing production planning. Panel shipments through April 2026 are running 2% above the iPhone 16 cycle and 3% above the iPhone 15 cycle at the same stage. Morgan Stanley's March 2026 AlphaWise smartphone survey recorded a blended global iPhone upgrade rate of $37, up 2 percentage points year over year, and the highest reading in the survey's history. Upgrade intent in China specifically surged 9 points to an all-time high. Apple is the only major global smartphone vendor expected to gain market share in 2026, according to that same survey. The data was visible. The beat was not a surprise to anyone watching supply chain signals closely. It was a surprise to consensus models that underweighted the upgrade cycle. Tim Cook confirmed on the earnings call that the company saw record iPhone upgrades in the quarter and double-digit growth in switchers, users migrating from Android to iPhone. He also confirmed that Apple now has 2.5 billion active devices in its installed base. That installed base number is the foundation of everything else Apple is building, and it matters more to the long-term investment case than any single quarter of iPhone revenue. The services segment delivered $30 billion in the quarter, a record DOAS growing 14% year over year. Apple hit all-time revenue records in advertising, music, payment services, and cloud services simultaneously. Services now account for 20.9% of quarterly revenue and carry margins that are structurally higher than hardware. Every additional device in the installed base is a recurring revenue opportunity across App Store, iCloud, Apple Music, Apple TV Plus, Apple Arcade, and Apple Pay. The 2.5% billion device figure is not a vanity metric. It is the addressable market for the highest margin business Apple runs. The ripple effect across the supply chain is already measurable. Taiwan's semiconductor manufacturing company, the sole producer of Apple's A19 Pro chip, has forecasted 30% growth for 2026. Driven in part by the memory-intensive requirements of the iPhone 17. Foxconn, which assembles the majority of iPhones, reported 18.1% revenue growth as it scaled to meet what it described as staggering holiday demand for the iPhone 17 Pro and the ultra-thin iPhone 17 Air. For investors with exposure to semiconductor and contract manufacturing names, the iPhone 17 cycle is not a single quarter event. It is a multi-quarter revenue driver across an interconnected supply chain. Samsung is feeling the pressure from a different direction. Apple brought 120Hz Pro motion displays to the standard iPhone 17 for the first time, removing one of the key hardware differentiators that had kept some buyers in the Android ecosystem. Combined with Apple Intelligence features and aggressive carrier promotion programs, The standard iPhone 17 is competing in a segment of the market Apple previously ceded to mid-range Android manufacturers. The $300 to $600 smartphone segment surged 27% in Q4 2025, according to Counterpoint Research. Apple took share in that range. Now, here is where the investment case gets more complicated and where the gap between the bull and bear argument sits. Apple is currently trading at approximately 29 times forward earnings with a market cap of $3.73 trillion. The consensus among 31 analysts covering the stock is buy, with an average 12-month price target of $295.31, implying roughly 17% upside from current levels. The highest target on the street sits at $350. The most bearish analyst has a floor of $205. That is a wide range, and the width of it tells a story about how much uncertainty sits underneath an otherwise dominant earnings print. The bear case has three specific components worth taking seriously. The first is memory price inflation. Cook flagged it directly on the earnings call. Market pricing for NAND and DRAM components is increasing significantly, threatening gross margins in the quarters ahead. The memory shortage is being driven by manufacturers pivoting resources toward data center components rather than consumer devices. Cook said it had minimal impact in the December quarter, but may be more noticeable in the current one. That is a margin headwind with no clear resolution timeline. The second component is AI monetization. Apple has been widely perceived as behind its peers on artificial intelligence. The company delayed its revamped Siri, partnered with Google to integrate Gemini models into its AI infrastructure, and has not yet demonstrated a pathway to direct AI revenue at scale. Wedbush analyst Dan Ives argues that Apple's AI strategy adds $75 to $100 of potential value per share over the coming years. Jefferies, taking the opposite view, downgraded the stock after the iPhone 17 launch and argued the sales surge reflected pricing stability and carrier promotions rather than genuine technological differentiation. Both positions are defensible. What is not yet clear is which one is correct. The April 30th earnings report will be the next data point that moves the answer in one direction or the other. If this gave you a clearer picture of what the iPhone 17 numbers actually mean for the investment case, hit like and subscribe. Share it with someone managing a tech position who needs more than a headline to make a decision.